வணக்கம். கோர்ஸ் கான்செப்ட்ஸ். Receipts and payments account. Receipts and payments account is a report of cash and bank transactions during a period. It is used in place of an income and expenditure statement. It is a consolidated summary of cash book prepared for the required period. It is updated with every cash or bank transaction or voucher entry. It gives full information about all receipts and payments under different heads and is prepared with the help of the cash book. The cash book contains a record of all receipts and payments in a chronological order, but the receipts and payments account simply shows the total amount received or paid. For example, a club receives subscriptions from its members on different dates in a year. These are recorded in the cash book separately on those dates. But in receipts and payments account, the total amount of subscriptions received during the year will appear as one item on its debit side. Similarly, salaries paid to the staff will appear in cash book every month, whereas the receipts and payment account will simply show the total amount for salaries paid during the year on its credit side. Then we can recall that the opening balance in receipts and payments account represents the cash and bank balances at the beginning of the year, whereas the difference between the total of the two sides reflects the closing cash and closing balances. The income and expenditure account. An income and expenditure account is the detailed summary of every income and expense incurred by an organization in a specific financial year. It is prepared on an accrual basis. This account records every income and expense in a particular year, irrespective of whether they are cleared or not. This account distinguishes capital from revenue and takes only the latter into account. It is a nominal account which outlines an organization's final accounts and is similar to that of profit and loss accounting by a business entity. It is prepared to find the surplus or deficit balance of an organization, taking both current income and expense into account. The income and expenditure account serves the same purpose for a non-trading concern as the profit and loss account for a trading concern. It is also prepared exactly in the same manner as the profit and loss account, that is, all incomes are shown on the credit side and all expenses and losses on the debit side. However, in case of non-trading concerns, the excess of income over expenses and losses is not termed as profit. It is called excess of income over expenditure or surplus. Similarly, the excess of expenses and losses over income is termed as excess of expenditure over income or deficiency. The 5 financial documents for every US non-profit organizations. 1. Statement of financial position, in short SOP. 2. Statement of activities. 3. Statement of functional expenses. 4. Statement of cash flows. 5. Annual report. The statement of financial position SOP. The statement of financial position is the non-profit's equivalent of a for-profit company's balance sheet. It provides a snapshot of the organization's finance, listing assets in the order of liquidity. The SOP is conventionally prepared at the end of the fiscal year, although larger organizations or those with extensive financial changes might choose to prepare an SOP quarterly or even monthly. Assets include cash and cash equivalents such as gift cards or certificates, grants receivable or depreciable furnishings or equipment. Liabilities include accounts payable, grants due to the organizations, or debts. The net assets are those remaining assets after liabilities have been subtracted from assets. Here, the accounting equation is assets equal to liabilities plus net assets. It demonstrates that the non-profit has enough cash or cash equivalents on hand to equal its outstanding debts. Donor contributions are accounted for any totaled separately in the SOP based on the category. They are categorized as unrestricted, temporarily restricted, or permanently restricted. Temporarily restricted might be grants or donations with particular donor stipulations, such as being used for particular program or at a particular time. Permanent restrictions such as endowments are not especially common among smaller non-profits but should be included if applicable. The statement of activities. The statement of activities is the non-profit equivalent of a for-profit income statement. The statement of activities is also called the statement of support. It shows how the net assets change over time, increasing as revenue incomes in and decreasing as expenses are paid. Like the assets section in the SOP, the statement of activities distinguishes between unrestricted, temporarily restricted, and permanently restricted activities. If revenue comes in within 1 year or other specified period, but with a restriction that prevents it from being used immediately, that income is and designated as temporarily restricted. If a donor makes an endowment or some other financial gift that can never be applied to programs, it would be designated as permanently restricted. However, the income earned from an endowment in the form of interest does not get reported again with appropriate restrictions. Income that is not cash, such as a donation of goods, and may be recorded in the revenue column. Similarly, any expenses that the acceptance of such goods entails, such as added security or storage facilities, should be recorded in the expenses column. There are some complex ins and outs of activity statements for issues such as donation of services and acquiring collection items for museums, which are not always classified as revenue. These are addressed in the generally accepted accounting principles, that is GAAP, for activity statements, but there are differences in the gap treatment if donated goods and services and how these items are recorded on the IRS Form 990. Statement of functional expenses. The statement of functional expenses is a list of expenses by function such as program expenses, administrative expenses, and fundraising expenses. This statement also lists out expenses by type such as salary and benefits, rent and utilities, and so on. The representation is usually the presentation is usually a matrix or table form. The division shows readers of this financial statement, whether auditors, board members, or potential grantors, the balance non-profit maintains between funding programs and maintaining a staff. On one hand, administrative expenses should not be grossly out of proportion to program funding. On the other hand, administrative funding should not be pushed down so low that you are not attracting competent, qualified staff. In practice, costs might be in two or more categories at the same time. In this case, it is appropriate to determine a relative breakdown and properly allocate cost in each category proportionately. Statement of cash flows. The statement of cash flows for non-profit organization provides a picture of the cash coming in and going out in a given period, whether it is a year, a quarter, a month, or generated on demand for a determined time period. The statement of cash flows typically includes up to 3 sections depending on your non-profit sources of cash. For most non-profits, this means net cash from operating activities such as unrestricted funds raised from fundraising activities or cash fees from fee for service operations. Investing activities such as expenses or earnings from the purchase or sale of equipment or other long term investments. And third is financing activities such as earnings from issuing or redeeming bonds. So here the operating activities, investing activities, and financing activities are shown in a different way when we compare it with for profit organizations. Annual report. The best annual reports of any non-profits organization effectively communicate information regarding the previous year in hopes of building accountability and trustworthiness with their audience. In order to do this, organizations must use their annual reports for more than a recap of the year's biggest events and fundraising campaigns. Non-profits should use annual reports to share their accomplishments, thank donors for their contributions, give viewers an intimate look into their organization and the impact they are making, and generally relate why the cause is worthy of support. Non-profits have relevant information about finances that is not included in basic financial statements. Enter the annual report, which you can use to communicate your organization's fiscal health in richer, detailed. Information relevant to the annual report might include attendance records for fundraising or community events, noting that significant attendance could point to financial improvement in the future, especially if a new donor pool has been identified. It includes the list of donors and their giving levels, the discussion of the mission or the past year's activities, lobbying success, volunteer support, etc. Better annual reports attract donors while fostering a culture of transparency and accountability.